Welcome to Wednesday's forecasts. I'm Elaine Stenson. Today I'm joined on the line by Gavin Wright, Managing Director with EUR in London, to look at the euro-dollar pair. Gavin, the dollar rose against the euro on Wednesday after a report on US private sector employment in March showed a pickup in job creation. What's your forecast for the euro-dollar for 1 month's time?
Well, in 1 month's time, we see the euro-dollar around 1.34. The ongoing normalisation of monetary policy in the US and heightened geopolitical tensions linked to Russia's annexation of the Crimean Peninsula and swift policy adjustments to China's exchange rate and relative growth differentials and consolidation of price adjustments in the emerging markets are some of the key drivers shaping the capital flows in all the global currency markets. The US dollar has been depreciating on a trade-weighted basis over the past 2 months, yet the weakening trend does not present a uniform pattern across the universe of major global currencies, and looking ahead we anticipate a promising outlook for the US associated with the increased attractiveness of interest rate differentials following recent guidance provided by the US Fed. Additionally, we maintain a relatively bullish view for the US growth outlook.
Euro bulls are betting the ECB will stand firm on policy on Thursday, even as the threat of inflation slipping into deflation mounts. What is your expectation for the euro-dollar pair in 3 months' time?
Well, at the end of Q2, we see a continuing decline to around the 1.32 area. The available data depict a relatively solid growth performance in the euro area during the first quarter, led by Germany. However, we anticipate a subsequent slowing in the second quarter, given persistent euro strength and the heightened geopolitical concerns, which have begun to sap confidence in the already fragile recovery. We maintain our real GDP growth projections of 1% in 2014 and 1.3% in 2015. Deflation concerns remain prominent in view of the strong euro and still abundant excess capacity. The ECB will maintain a strictly dovish bias in contrast to the central banks of other advanced economies, including the US Fed, which now looks poised to start raising interest rates in the first half of 2015. Although we do not currently expect any changes to the ECB policy interest rates in the near term, the risks remain heavily tilted towards additional monetary easing by both conventional and unconventional means.
And finally, Gavin, what are you expecting from the euro-dollar 1 year from now?
1 year from now, we see the euro-dollar below 1.3. The European currency landscape is being shaped by dual-force system euro strength and intensified geopolitical stress triggered by the Russia and the Ukraine conflict. Continuing to defy macroeconomic fundamental forces, the euro has maintained a strengthening bias over the past 2 months, shrugging off the Russia-inspired volatility. We estimate that the euro-US dollar rate, which had hit a high as much as 1.3967 in intraday trading in mid-March, will regain a weakening bias over the coming months and close the calendar year below 1.3 on the back of relative central bank policy. A subdued outlook for growth and an easing in euro bullish capital flows.
Gavin Wright from EUR in London, thank you for joining us on the line today. And that's all from me for now, but forecasts will be back on Friday, so do join us then. Bye for now.